Jay, what's your favorite podcast app named after a fruit?
Gotta be Apple.
Can you think of any other ones?
I tried really hard, but I didn't want to wait for too long. I didn't want too much dead air.
Hey, you know what's worse than dead air? Not getting reviews on Apple Podcasts from your listeners.
Oh my gosh, it is the worst. Every day that I wake up and I don't have a new review on Apple Podcasts, I just look up at the sky and I go, ah!
I like how the first thing you do when you wake up is to look at Apple reviews.
If only I was lying. But I'm not. And I'm looking for new reviews for Upside on Apple Podcasts, Eric. And if you are listening to this right now, you could be that person that helps get the day started right.
All you have to do is go to Apple on your iOS device or web browser, log in and leave us a review. 5 stars would be nice. 4 stars would be great. Let's do 5 stars.
Let's do 5 stars. Definitely prefer 5 stars. Even if you don't use Apple Podcasts as your preferred listening app on an iPhone, please take a moment to rate us there anyway. It helps us bring on great guests. It helps us climb the charts. Our show will get better if you do this very simple act. So please.
Afterwards, I just get a random text from him. He's like, hey, I'm doing the Fun Midwest. Do you want in as a GP? And I was like, yeah. And that was it. That was the whole conversation. And then like next
Amazing.
week, we're on a call with Jenny Fielding, who's the founder of the fund, or one of the founders of the fund.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside. Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Sunburned Face himself, Eric Hornung.
Look, Jay, when you're out there playing 4.5-hour rounds, the sun can get to you even in March, even in Cincinnati in March.
Is golf a prerequisite hobby if you're going to get into finance?
So as I try to be contrarian in life, and I purposefully said I will never get into golf. I'm anti-golf. Everybody in finance is golf, and accountants and lawyers, you're all golf, right? It's like, oh, got to join a country club, got to be a golf guy. No, I'm out. I'm going to make the path my own way. And then COVID hit, and I had nothing to do. And the only way to get out of the house was to either go play golf, which I didn't do, tennis, which I didn't do, biking, which I didn't have a bike, and they were going at like 5x a premium, or running, and I absolutely don't do that. So golf won out, and now I'm a golf guy.
Pretty good socially distanced activity. Yeah, I get that. Golf is fun. I like golf. It's really hard, and it's hard for me to justify spending that kind of money on something that I know I'm going to have a really bad time of doing, at least like look really bad and really drag out these holes. Do you do like the scramble or like the best ball type of situation?
When we started, did that a little bit more. But last year, it was literally my only escape from, listeners, you can't see me right now, but this background was who I was in 2020. Like this is who Eric was. I sat in this seat for all of 2020. And the only escape from that was to go play some golf, get outside, get a little fresh air. So yeah, that's how I got into golf, Jay. And it is hard. But I told Colleen, look, if I start golf, I'm the kind of person who's just like hyper competitive to the point that like I'm going to get good at golf. So there's unlimited driving range days and all kinds of stuff like that. So
did you buy a set of clubs?
I told myself that I'm going to use this old set of clubs that I had from high school. So I used to have 2 sets of clubs. I lost one of them. And the other set, I think is from like 1987. And technology's changed a lot in the last 34 years. So I told myself if I could shoot a 9 or an 85, I'd buy myself new clubs. I shot a 92 and I got clubs for Christmas. So, close enough.
I feel like you got to have your own set of golf clubs if you want to live your best life.
Absolutely. And if you want to live that one life, you have to live the best way you can. You should also go talk to our friends at Ethos Wealth Management. You can go to upside.fm/ethos to learn more.
Well, speaking of games and finance, Eric, here we go. This is a good segue. Today we are speaking with Chris Bergman, the general partner of the Fund Midwest, and also the founder and CEO of Gylee Games. Gylee Games, which is Chris's day job. Can you call it a day job if you own the company?
I think you can call anything a day job as long as you work on it during the day.
Gylee Games believes in building big worlds. They create fascinating characters that develop and grow over time. They also believe that games can be enjoyed in smaller chunks, not requiring hundreds of hours, but a delightful experience in short bursts. Gylee Games creates games for PC, console, and VR. Right now, they're creating a game called Rah Rah Boom. But that is not why we scheduled this interview, Eric. In fact, we scheduled this interview to talk to Chris because he is the general partner of the Fund Midwest, which is part of the Fund, a New York-based venture capital group, which was founded in 2018. The fund has since expanded with microfunds in Los Angeles, London, the Boulder, Denver region, and now the Midwest.
Gylee Games kind of reminds me of only playing 1 or 2 holes of golf. You know, like 18's a lot of holes. You really got to commit to it. But if you just went out and, played 1 or 2 and then had some drinks after, that'd be kind of nice. Also, you know what's nice about golf, Jay? To come back full circle here. Midwest, a lot of golf courses. A lot of really nice golf courses.
A lot of flat land. Is that required for golf courses, like some flat land?
I think a little hills is nice, but yeah, flat land's good too. The thing is, though, they're super underrated because people always think, oh, Florida, golf. But there's a lot of good golf courses here in the Midwest.
And the Fund Midwest, I think there's a lot of great founders here in the Midwest as well. Chris is based in Cincinnati, Eric. And the sad irony is that you, also based in Cincinnati, are not going to be joining me for this interview.
We had a little hiccup with scheduling here, Jay. And when I say little hiccup, it is not on you at all. This is 100% on me. I double booked my calendar because calendar management, up until recently, has not been a strength.
And what is not a strength for me is staying away from talking about a video game studio model, which is what Gylee Games is. I'm going to try and talk about the Fund Midwest as much as I can, but gosh, I really got to get some of these questions answered I have about video games. So we're going to talk to Chris here in just a minute. We'd love to hear what you think about this episode. You can tweet at us at UpsideFM or email us hello@upside.fm. And I'll talk with Chris right after this.
This episode is sponsored by Funboard. Funboard is a free tool to help you find startup investors and manage your fundraising process. Funboard helps you to find not just the right firm, but the right person at the right firm. Funboard makes it easy to search, save, and share. You can search thousands of investors ranked by how they match to your startup. Save them to your Funboard to create your list of targeted investors. And share your Funboard with your network to game plan how you will approach investors directly. You can build a tailor-fit list of startup investors in minutes with Funboard. Learn more at upside.fm/funboard. That's upside.fm/FUNDBOARD. And the link is in the show notes.
Chris, so grateful to have you here on the show. Welcome.
Hi, Jay.
I want to dig into your background a little bit before we get into the Fund Midwest. So being there in Cincinnati, can you tell me about your history as it relates to startups and Cincinnati?
Oh, man. A long and storied history. I grew up in Cincinnati. I was very frustrated growing up in Cincinnati because there was no really cool places to go work or do cool things. And so I moved out to California and became an art director for a couple different skate magazines, and then came back to Cincinnati and goofed around doing design work for a bunch of different people. And that led to building websites, and that led to making apps for big brands like Maker's Mark and Sam Adams and New Balance shoes. And then my wife got pregnant with our first child, who's now 9, which is crazy. That sort of led to ChoreMonster, which was our first product. Me and my co-founder at the time, Paul Armstrong, our first product that was direct to consumer, and went on a wild ride for about 7 years running that. We had 4 million users, 500 million chores completed. Kids did chores and collected farting monsters. It was a ton of fun. Disney invested in it. Because of that, I ended up spending about a year and a half, 2 years in New York, and just recently came back last year to start Gylee Games, which is a video game studio focused primarily on PC and console games.
All right, yes. ChoreMonster is exactly where I first met or became aware of Chris Bergman. So talk a little bit more about that. What was ChoreMonster? You kind of just talked about all these chores are getting done and there are fart monsters involved. What was that?
Let me see if I can still do the pitch. Are you ready, Jay? Let's see if it's still in there somewhere. ChoreMonster is a suite of web and mobile apps that allow parents and kids to actually enjoy doing chores. Kids can gain points and turn them in for real life rewards like an hour of Xbox, a television show, or a canoe trip. With ChoreMonster, your kids will beg to do chores.
That was great. Okay.
Thank you.
4 million users.
Yeah.
Something like 500 million completed chores.
Yeah, man.
Disney invested.
Yep.
What happened with that business? Where is it today?
It is owned partially by a big corporation.
Okay, maybe a longer story than we can get into in this interview where we're exploring something else, but that might be a part 2 that we come back to.
Yeah, totally.
How did you transition out of that to now Gylee Games and the Fun Midwest?
Yeah, so it was interesting story, man. I was kicking around. I'd finished up the corporate thing that I was doing in New York and spent about 6 months hanging out at BetaWorks in Chelsea, Manhattan, and really kind of considering what my next, sort of move was while our kids were going to school in New Jersey. So like there was no rush to move anywhere or are we going to go to LA or are we going to move to Brooklyn? What's sort of our plan? Finally came home one day after about 6 months of hanging out and chatting with my partner and said, "Hey, I think I want to make video games finally." And she goes, "It took you 6 months to figure that out?" Because it's something that I've wanted to do since I was a kid. I was the founder of the International Game Developers Association's Cincinnati chapter, which now has over 500 members. So I'd always been somewhat involved in game making for a very long time, but had never, had the opportunity to go build a full-on creative studio for PC and console games. It was fascinating, man. I had expected to raise the capital that we needed to start that studio in about 9 months in New York. Happened to come to Cincinnati and met with some of my old investors, and they said, "We'll give it all to you and you should get here now and get started." And so we did. And now if you include interns, we have a team of about 40.
Wow.
Yeah.
This is going to be hard for me to get to the questions about the Fun Midwest because I have to spin out on a couple things here.
Yeah.
What makes a game a game? Because with ChoreMonster and my limited knowledge of it, there were gamified aspects of that. There were characters. It was animated. So what's the difference between something like that and what you're calling a game?
Yeah. So this is kind of my personal clarification. I don't know, if this would be broadly applied, but for me personally, ChoreMonster, especially, as it gained a bunch of users, most of the decisions were data driven, right? And optimized for particular behaviors, optimized for user retention. And there's definitely some of that in video games as well, but PC and console games in particular, I'd say about 90% of the decision making is subjective. It's creative, it's writing, it's art, it's tone, it's voice, it's acting, it's editing, it's gameplay mechanics.
I see what you're saying. You're saying as the developer, the decisions you were making on ChoreMonster were data driven. And as the developer of games, this is more narrative driven. At first, I thought you were talking about like the decisions that were being made by users, but you're talking about you as the creator. Yes,
me as a creator. Yeah, for sure. In the creation of the product and in the optimization of the product, I definitely think, with ChoreMonster, we were trying to solve a real world problem, right? Like it is the sort of the fundraising, is this a vitamin or a medicine, right? Because I'm only going to invest in a medicine. Well, ChoreMonster was definitely a medicine. Parenting's super hard. Parents had a huge problem with getting kids to do stuff, and ChoreMonster did an incredible job of solving that by leveraging both intrinsic and extrinsic motivation. With the game that we're making right now, which is Rah Rah Boom, which is a 4-player co-op beat 'em up about ninja cheerleaders from outer space. It's
These are just fun words to throw together.
Oh, it's so great. Yeah. But it's entertainment. I mean, and it's truly about the story of these characters, and it's an all-female cast, and it ends up, the game is a lot about identity and grief and some pretty heavy topics, but at the end of the day, it's storytelling.
So when you were talking about your story and you were doing, I think you said like skate magazines at the beginning, and then that became developing websites and apps, and then you built this SaaS tool, essentially, or SaaS company, and now you have these games. Like, are these skills that you taught yourself, or are you leaning on other developers a lot of the time to make this stuff?
Well, Jay, I'm a high school dropout, so not a lot of formal education for this guy. Man, I was just explaining this to somebody I was mentoring today, where if I need to get something done, I'm going to be able to do a D+ job at it. Right. So, done is better than perfect always. And if you need to get something across the finish line, I can roll up my sleeves and get whatever done. Right. However, I think, when I think about my career and the things that I've become most effective at, one of them is surrounding myself with people that are really good and finding the A+ people. And so I very much enjoy building teams. I very, very, very much enjoy building culture. And speaking of culture, I mean, so Gylee Games just launched our webcomic this week on our Twitter and Instagram, which is just at Gylee Games. And it's just talks about our culture as a team and talks about the ridiculousness that we get into. And so all of those people that are in those webcomics are A+ at what they do, whether it be producer, designer, developer, whatever. But I believe like most of what building companies is culture and team.
And you started Gylee in 2019, right?
Very beginning of 2020.
Okay.
Yeah.
Do you guys have a game in market yet?
Nope. We're still a year out. So production cycle for this particular game is about 3.5 years. It's quite a long process, very different than sort of agile development, right? Like this is much more waterfall. And I mean, there's some elements of prototyping and testing and, can I verify this hypothesis, which essentially is this fun? But for the most part, it's quite a long process, quite a long journey. And we're doing something that's all 2D hand animated. So very, very high production value.
Okay, I think I know how I'm going to get to the fun Midwest here in a second. Did you have a hard time or an easy time raising for ChoreMonster initially?
I think it's an unfair story to tell because I just felt like we got really lucky with timing. This was in 2011. The App Store was just starting to gain traction. There were no family-oriented apps that were in market at all at the time. We were one of the very first ones. ChoreMonster was initially supposed to be a side project of our digital agency. It was, we never expected to raise money. And I think we had a lot of help from the Brandery specifically, which we went through in 2011. The whole reason I said yes to the Brandery was because I didn't understand venture capital at all and learned an immense amount through that process. And then came out of Demo Day and Cincy Tech led our seed round. So I think, it wasn't difficult at all early. And I think most of that was due to timing more than anything else.
So that was led by Cincy Tech there in Cincinnati.
Mm-hmm.
Now you're doing a gaming studio with 40 employees and no product in market yet. So obviously there's funding that had to be involved in that. Mm-hmm. What did that process look like?
It's one particular investor group that's private and doesn't like to be talked about a lot. They're not professional investors. They're, guys that have a group together. But I asked them, like, why did you say yes so quickly to this? Like, I kind of can't believe it happened so fast. And their response was, they were investors in ChoreMonster. So we had probably about 5 or 6 year relationship at this point. And, they had been around me for a long time. And they said that I communicated with them every week. They weren't really deep in the stack, or they didn't have a big chunk of the stack of the cap table for ChoreMonster, but I communicated with them the same way that I communicated with everybody else that was on the board or whatever. And they said that would, like, we know that you will always give us straight communication about what's going on. And our confidence is super high just in that alone. Right. And you come up with ridiculous ideas and they'll be successful.
Very cool. The reason I ask these questions, I have a little bit of understanding of what it looks like to develop a game and the long cycle that is there. Because there's a group in Columbus that I've gotten to know a little bit that has tried to do a similar thing. And I've just talked to him and learned a little bit about the industry. It just seems
Can
like
I ask who it is, or should I not do it on the podcast?
Chris Volpe.
Yeah, I know Volpe well, man. I'm the resident DJ at GDEX.
Oh, really?
Oh, yeah.
So GDEX, for listeners who aren't familiar, is the largest, at least Midwestern gaming conference in the country. Probably even has a better tagline than that I just gave it, because there's probably not that many gaming conferences generally, and it's huge. I remember talking with Volpe and loving the idea of a video game studio because it reminded me of like a Hollywood movie studio.
It's structured very similarly. Yeah.
Can you talk about that a little bit?
Well, I mean, it's structured that in many different aspects, right? Like, you have pre-production, you have a pre-production cycle where you're trying to figure out what is the thing that you're actually trying to make. You're doing storyboards very early on. You're writing scripts. I mean, except you're writing, for us, we have about 10, 12 levels. And so we're writing essentially 10 to 12 movies, right? But you're pulling in a lot of the same talent. I mean, all of our voice actors are full-time actors as well. You're working with primarily creative people. And then even, I mean, if you want to get into the real mechanics, we're kind of structured differently, but like primarily the investment is royalty based and based on the entertainment model.
And so when you look at this as a venture capital type of investment, how can you be sure that what you're creating is going to find an audience? Because it is kind of like a hit maker's type of business, right?
Yeah. Wow. That's a great question. So one, I don't think video game studios are particularly venture backable. So I want to start there. Gylee Games was built to live for indefinitely. Like M&A is not something that's interesting to us at all. We are about having a portfolio of creative content that millions of people love, right? So I don't think that model actually works really well for a lot of venture. But I do think, as far as investment is concerned, like I said, the structure is different. You typically get a guaranteed return of some sort, and then an indefinite royalty on top of that. So it's less risk in that sense. In regards to audience, there's this, Jay, there's no such thing as build it and they will come, right?
Totally.
Like there's all sorts of marketing, content, community, Twitch streamers, YouTube creators. There's an entire strategy around getting people to love the thing that you're making. And I think in that, in early pre-production, we did a ton of research about the type of audience that we're going after and why we're going after them, and having a very clear understanding of who we're creating for before we ever did any production.
And how did you make that decision? Because there's got to be any number of groups you could go after. How did you decide on this is the avatar that we're pursuing with this first game, which is a gargantuan effort of time and energy up front?
For me, it's always sort of, I tend to work backwards, where I think about the thing that I want to make. This is just me as a creator. I, kind of have an idea of what I want to make, and then is there a market for it, right? So I had bought RahRahBoom.com in 2008. I just loved the phonetics of it. And then over 10 years, I sort of developed the game in my head, right? These are cheerleaders with guns that are violent and fun and wholesome. There's a lot of friendship elements. This is all stuff that's going through my head. And so when we get to a place where, like, okay, let's validate that as a potential game that fits a good market, most of the research was particularly around female video game players, which, by the way, is the largest segment of video game players in the US. 36% of all video game players are women over the age of 18.
Wild.
Right. So, if you look at it, so this is strictly from a business standpoint, right? Like if you look at it from a market standpoint, it's underaddressed completely. It's definitely under, for lack of a better word, spoken to, right? Like that experience there isn't nearly enough content being created for that, right? And so as I'm writing a game with aka Fido, she's an amazing writer, we're writing it together, and we're having all these conversations around identity and my personal struggles that I want to put into the game, right? Like I've insane amount of imposter syndrome. It is by far the leading sort of piece of my personality. So it's so important for me to create around that challenge, and realizing that that's a huge epidemic across most of human behavior and human experience makes that easier to make, I think.
You selected one of the largest segments of the gamer market is the answer that I took from that for what I was asking.
Yeah, and it's completely underserved. I think that's the other piece.
If a game like this takes several years to develop, is that an advantage in terms of marketing, because you can start marketing the game and essentially socialize the concept for 3 years before it's even like really on the clock?
I mean, yeah, time's always an advantage, right? And I will tell you a downside to that, though. So yes, to answer your question, I mean, we're still a year from release, and we've just started our marketing strategy, this past week with content that we're creating, primarily around the Gylee team, less about the game, because we want a lot of the game to be a surprise down the road. So the challenge there is like asset management. Do we want to show this cool moment that happens in the game right now, or do we hold that and let players experience it in the game? Ideally, as a creator, I want them to see it for the first time in the game. So there's some give and take there for sure. And there's definitely a challenge of like, when do we show this? So the way our approach is like, well, let's talk about the people that are making the game, because we want to lift them up anyway. There's also this whole other challenge in the gaming industry that like people don't get credit for making these things, man. When you have so many people that are making games, their names don't get attached to them the way that like a music artist, you know who's making the things. And so we're trying to be very intentional about lifting up the people on our team and talking about them as creators themselves, right? I think that's really important. But the downside of a 3.5 year cycle for a 4-player beat 'em up is when we started this, games like Streets of Rage 4 and Battletoads hadn't been announced yet. So we didn't know that there were other people that were, the best example that I can give it, .emu, who made Streets of Rage 4. We had been working on our game for 6 months, and then that got announced, and it looked phenomenal. And so we realized we had to go and redo all of our art.
Because the expectations of the market were just so much higher than you thought?
Yes, they escalated it way higher and rose the bar of what this type of game should look like. So like, there's an example of like, it takes so long to get to market. Somebody else can get to market before you and change the market dynamics completely.
In elevating the quality of the art, does that come down to the artists on staff, or does that also have a cascading effect across development, making development harder and longer?
So it's a little bit of both.
I'm probably making a separation that's not even there.
Yeah, so to elevate the art, often you need better talent. Like, it's just, what's fascinating about artists is they can cap, and it's sort of like, hey man, you got to go away for 5 years and come back to hit the standard that we're now setting. Which I had to have that conversation. It was very, very hard conversation to have, and I did not enjoy that at all. And I know he didn't either. So there's definitely like, hey, we need to up our talent to meet the standard that the market demands on the art side. I think on the development side, it's more about, hey, I think we have to change the way that we're handling this asset or adding new special moves or whatever. And much of the development of the game so far has been just getting the engine in place and getting sort of the very basic elements of a video game in place on sort of a back end dynamic, adding AI for enemies. And so you have to build a whole system and a whole set of tools to get enemy AI to work, right? And then once it's in there, then you have a year to tweak it and make it fun. But the first couple of years is primarily just getting all that stuff in place.
Something else I learned from Volpe was that games are built mostly on like Unreal and Unity as engines, mm-hmm. right?
Yeah.
And that is also what AR and VR is typically using. Mm-hmm. And so it sounds to me like there's probably more of a strain on just like the overall available engineering resources globally to do games like this if AR and VR is starting to take off.
Absolutely, man. I mean, it's been fascinating. So we're built in Unity, but we're kind of like breaking Unity as well because it's a 2D game. Like, it's not, Unity doesn't handle what we're doing. We actually have a 2D game that sits atop a 3D mesh so we can get characters to move around in the environment. So we're sort of using it in ways that it's not supposed to be used. As far as engineering talent, it's been fascinating because like where I see, like in Cincinnati, you have a ton of digital agencies that are doing work for P&G and Kroger, which P&G and Kroger specifically are leveraging VR a lot to kind of do models of their retail stores or whatever, right? And creating those sort of digital experiences. So there's a high demand for specifically Unity developers in Cincinnati. But what I have found is when a Unity developer gets to choose between building a Kroger store virtually or making a video game about ninja cheerleaders, it's a pretty easy choice.
That's a good point. That's a good point. So you're saying most of your team, if not all of your team, is based in Cincinnati.
Correct.
And you're finding that talent locally, or are they coming
almost
to Cincinnati
locally
to do it?
Yeah, we've had a couple people move here. Yeah, we have one that we have a production artist that the rest of my art team is trying real hard to get to move here. She lives in Boston right now, I think, which is just fun to watch. But yeah, I mean, we've had quite a few people move here. Have people from LA, have people from Boston, Austin, I forget where else. And then a lot locally, all of our engineering talent has been found locally.
Wild. The economics of this are just blowing my mind because this sounds like a ton of fun. I would love to do something like this. Mm-hmm. It also seems like I'll be putting so much pressure on this first game to do well to recoup what must be like a huge investment. Do you feel that pressure?
I got very good at feeling pressure is how I'll answer that. It took a lot of effort and a lot of work and a lot of therapy to get good at handling the pressure. I think we have a killer creative IP. I've had the advantage of spending a lot of time at Disney. We had an office at Walt Disney Studios for 4 years. And so spent a lot of time in that environment and understanding the entertainment business directly. And so when I think about our IP and I think about transmedia and sort of how this manifests itself into comic books, animation, whatever else. I see a lot of value there. Also, this is sort of like a AA indie game is what it would be kind of described as. And like the life cycle of games today are pretty long, man. I mean, you have the initial launch, then you have a bunch of, launching on different platforms. Like one platform may have exclusivity. And then you have, after that, you have DLC and maybe a skin or two that you're selling as well. And then Steam sales start, and so you're already like in year 3 or year 4 of revenue for one particular SKU. And then Game Pass exists. And so then it can go live on Game Pass after the fact. And then once the game lives on Game Pass, then you have more DLC. And so you can get 6 to 10 years of revenue out of one SKU. So I think it takes a long time to make it, but the tail of value for that is much longer than you would think.
Is the strategy to go out with a bang and try to get a bunch of players? Of course, you want as many players as possible from day one. But is that the model for indie studios, or what does that look like? Is it paid acquisition? What's the model?
Yeah, I mean, there's a really good paid acquisition model because you have a very clear idea of what your LTV is for your user, right? So you can run that model pretty easily and know what your outcome is going to be early on. For us, I think the biggest advantages that we can have are in platform positions. So like, where does our game appear at launch on the store of like Steam or of Xbox or what have you?
Yeah.
I think that's one of the biggest advantages for customer acquisition early on. And then Twitch, man, I mean, just having streamers and influencers play your game, love your game. For us, like our characters are very cost playable, and that's super intentional. We want people to live out their whatever adventures they want with our characters in their own minds, right? Like, so all of that is super helpful as well. I think so. Yeah, of course you want launch day to go well, right? But there's that longevity of a creative IP that doesn't exist in an app.
Love how many layers of intention you can put into this. Like the idea of making something cosplayable, and then okay, we know that Twitch streamers can change the game for us on this, and with the lead time of development, can you just like be trying to build those relationships and be dripping out a little bit of information to those people all the time?
Mm-hmm. And it helps that I'm a fan too, right? Like
Totally.
I love the content that they're putting out already. So it makes it super easy to be like, hey, I love you.
Is there a precedent for Twitch streamers to be minority stakeholders in games?
I have seen that in the past. What I've seen more of, I think this is actually directly correlated with the Fun Midwest, because there's a company that we're looking at that we're really excited about, that a Twitch streamer is one of the co-founders. I think it's you see it more in tech than you do in game studios.
Interesting. Seems like an opportunity.
For sure. Absolutely.
Well, let's transition. It almost hurts me to transition because I love talking about this stuff, but our whole premise here was to talk about the Fun Midwest. So how did this enter your world of opportunity?
I last year was in EIR at Techstars, and I worked at MetLife Digital Accelerator. This is all while running Gylee, primarily because like I very much enjoy making video games, but I also am hyper passionate about tech, especially like young tech founders and mentorship and their mental health and how to survive the chaos that is running a company, right? So I joined MetLife Digital Accelerator last year, and the managing director there is Ted Serbinski. Ted, at the time, he was a partner at Detroit Venture Partners and led the Series A for ChoreMonster. So he's been on my board for a long time. We've known each other for a long time. We've been very good friends. He's out in Detroit. So we did MetLife together, and that went really well, and got to mentor some awesome, amazing companies in that cohort. And then afterwards, I just get a random text from him. He's like, hey, I'm doing the Fun Midwest. Do you want in as a GP? And I was like, yeah. And that was it. That was the whole conversation. And then like next week, we're on a call with Jenny Fielding, who's the founder of the fund, or one of the founders of the fund. And so we spun it up extremely quickly. I think he and I have a real passion for founders, especially like pre-seed stage founders. And we brought on Jennifer Freed out of Chicago, who's the CEO of Explore Surgical. She's brilliant. We brought on Lindsay Campbell, she's out of Pittsburgh. She had a dope company, ShowClicks, that she sold. She's brilliant. For me, I'm always just looking for excuses to hang out with super smart, brilliant people and talk about starting companies and entrepreneurship. And so it was a great opportunity. And then also unlocking capital in the Midwest specifically is super important to me. I think the Midwest has the most dormant capital in the country. I think there's an immense amount of old money that's just being, burned in GameStop stocks, and should be put to work in higher risk, higher reward scenarios. I think the part of the fund that really resonated with me is the first 50 LPs in our fund are founders. So it is a fund that is primarily financed by founder operators, not traditional LPs. So when we make an investment into a new CEO, we surround that CEO with 50 other founders. Local guys like Charlie Key, who's a good friend of mine and somebody that he and I constantly compare notes about whatever we're working on, and he's super brilliant. Aaron Buccarelli, who's also here, he's got a new company called Tixie, and he was the drummer in Hawthorne Heights.
Anyway, he looks suspiciously like, who's the lead for Maroon 5?
Oh yeah, he does. I can't remember the guy's name, but yeah, 100%. And he's just as jacked too, which is
I'm like, suspiciously like him. I think he is him.
I'm like, why are you so handsome, man? I get nervous being around you, because he looks like a rock star. Anyway, but guys like that and people that really truly have helped me along my journey for years to be able to leverage them and their expertise into new founders, I think is really important. And it's, for Cincinnati specifically, there's been a vacancy of our generation of entrepreneurs and the generation below us coming up, and us not being able to click and connect. And I think COVID's a big part of that, because you're not having meetups, you're not, there's a lot of traditional things that aren't taking place. But at minimum, here's an opportunity for us all to connect, to get together and help each other.
I was looking at the fund's website, and they have chapters in New York, Los Angeles, London, Australia, Rockies, Midwest. So how do they decide when it's going to be like a city like Los Angeles versus a region like the Rockies? And why was the Midwest and not the fun Detroit, the fun Cincinnati?
Yeah, I think a lot of that has to do with deal flow and capacity. For the fun Midwest, we have a hypothesis around sort of this. Gosh, I'm going to do. Ted Serbinsky has a great blog post on what he calls the star of the Midwest, and he draws a star between like Detroit.
I saw that it used to be called the diamond.
Yeah, the diamond. That might be it.
I was going to say, if it's gone from the diamond to the star, I would love to know what the 4 points were and what the fifth.
No,
point
I think
was.
it is the diamond. I think you're right, but it was Chicago, Cincinnati, Detroit, and Pittsburgh, right? And I would add Indy to that as well. Especially with like stuff that High Alpha is doing. They're creating an entire ecosystem, in my opinion. So, but like sort of that as an investment thesis along the whole, I think that was just sort of the approach. Like, could we have done a Cincinnati fund and a Detroit fund? I think that would have been totally possible. But for fund one, how much effort do you want to put in fundraising? And the best part about raising the fund is it's split across all of our GPs. So I'm only having to raise a quarter of it as opposed to all of it, right? Which isn't, I run a video game studio. That is my number one priority. And I think for the Fund Midwest in particular, it's built to where founders can operate it, sort of spreading the heavy lifting.
Is that the model for the fund generally across all the regions?
As far as I know, yeah. I know that most of the GPs and investment committees are people they have their own companies. They're founders in their own right, doing other stuff.
What is the investment thesis of the Fund Midwest? What type of founders are you looking for? What type of stage?
Yeah, so primarily pre-seed and seed stage. We like to live within, a 3 to 5 million cap pre-money. We write checks between 50 and 100K. We're hoping to do 30 to 40 investments over a 2-year deployment period. And our only criteria outside of those sort of, financial mechanics is that you're in the Midwest. So you're in Illinois, Indiana, Kentucky, Ohio, Michigan, and Western Pennsylvania. And we sort of split the Midwest as well, right? Like we're not doing Wisconsin or St. Louis or some of those other places. So I'd expect to see, another fund pop up in that. I hope somebody takes that region and goes after it. I think it's worth going after.
Has it been easy to get, if you're a quarter of the fundraising responsibility for the Fund Midwest, and you're saying there's all this dormant old money in this region, have you had an easy time convincing people to take these riskier positions in these companies? Well,
for the Fund Midwest, you're primarily talking to founders, so you're not talking to that type of capital.
I see.
And so
Funded
it's very
by
easy.
Founders, run by founders.
Yes. So funded by founders and run by founders. So you're talking, one, it's a pretty approachable minimum requirement to make an investment in the fund, which makes sense sort of for the people that would be in it. It's kind of just like a text message like, hey, I'm doing this. You should be a part of it. We're going to go hang out with a bunch of new founders and help them be better humans and better CEOs. It's a pretty easy yes, because it's people that genuinely care about helping others.
Do you guys plan to lead rounds?
Likely no. No. So we're primarily follow on. I think our advantage is we tend to be the smartest money coming in. If it's not a strategic investment, it's not like a typical angel investment where you have a guy that runs a car dealership that's trying to tell somebody how to run a tech company, right? Like you're getting actual good advice about running companies from founders that have done it before. And so I think we find we sneak into deals that maybe we wouldn't be in normally because of sort of the intellect behind the money and provide a lot of value there.
I saw in the TechCrunch piece, Ted said he thinks the fund is unique because of its speed. It intends to invest in 2 Midwest companies a month for 2 years, 24 companies in 2 years. What does that mean to you and the folks who are involved in like vetting these companies in terms of your own time commitment? Running your own company, you got to find 24 companies to invest in the next 2 years. That sounds like it could be a lot of time.
It's all inbound so far. Nobody's had any challenges with deal flow. And I think part of that is because here's what tends to happen when you're a founder. I'm sure you've seen this, right? So you become a founder, you get written up in your local business courier. Everyone thinks you're famous. And so then you get 20 other entrepreneurs that are reaching out to you for advice, which like I love. I want to talk to them. I want to mentor them. I want to give advice, and I give bad advice constantly. So, and like, so you're seeing these, but up until now, I've not had any place to be like, hey, I can actually write you a check. I can give you something that's liquid, that's beyond just advice. And so now being able to do that, and then you multiply that by 50 people that are LPs in the fund. So they're all bubbling up their own companies that they're mentoring and advising and that kind of thing. And so one, you get visibility into the founders that you would never, ever, ever get as a traditional VC, right? Because you're having very intimate conversations around running a business. So it's a lot easier for us to have a deal come to the table and have an LP or one of ourselves, like the deal that we're in our first investment that we're making, which isn't announced yet, so I can't talk about it. But like the first one, like I was a person that was a part of the due diligence for the lead investor, right? So I had already gone through the due diligence process because I was helping out another venture firm, and so like having that kind of visibility makes it very easy to have a quick yes or no, and we really rely on that visibility, and it's worked out really well so far.
Totally. I love this wave of programs we're seeing like Spearhead, where it's like, hey, we think founders can actually surface some really great investments because they're already really close to these people and having these intimate conversations. I'd love to see more of that, and that makes some sense. Do you anticipate any tension between getting this inbound, meeting founders that you really love as people, and you think they might be able to do it, but then having to wear your investor hat and saying, I don't think this makes sense, given that you love giving advice?
I haven't run into that yet. When I was fundraising for my companies, the second best thing I could hear was a no.
A quick one, right?
Yeah, because I can move on and focus where I can. And so anytime I think that it's a no for us, there's typically like 5 other funds that come to mind that might be a better fit for them. And it's pretty easy to say, hey, let's go chase these down, right? Because I've already seen a lot of deals that like their valuation is just too high and we can't make it make sense. And that's not where we're living, but I can point them to people that can help them. So I think that's how you solve for that.
You're the only GP in this fund that's in Cincinnati, right? The others are in different cities around the Midwest.
Yep. Yeah. So
is there any competition around that?
Oh yeah. We're always fighting for our companies. Oh, absolutely. Yeah. I mean, that's the fun of it. And our investment committee, we're all close friends and very, very much enjoy each other and enjoy debate. And so it's really good. And I think the other piece is we all very much respect each other at a level where you can really listen to the other person. You can really trust their judgment, and you can trust why they're, I know they will never waste my time with any deal ever. Right? Like, because they wouldn't do that to themselves. And so when you can be that intellectually honest on an investment committee, it's pretty easy to get on the same page.
When you were fundraising, if you put yourself back into the seat of like 2011 ChoreMonster, Chris Bergman, did you understand the difference between raising from an operator versus someone who's been a venture capitalist their whole life?
No, not at all. I learned it. I mean, safe notes didn't even exist back then. I had no concept of what smart money was. What, you know what I mean? I got very lucky with my investors that they ended up being amazing and kind and actually cared about who I was and how I was, how all this was affecting me. I got extremely lucky in that. I think I could totally see that going a completely different direction, man. Like I hear the horror. I feel so bad because like I didn't experience any of the horror stories. Like I love my investors. I still hang out with my investors and text them regularly. I got a bunch of congratulations when the Midwest Fund was announced where they were all like, "Oh, you're one of us now, you loser." You know what I mean? So but had I known, I would have been terrified.
Well, this has all been fascinating. We meandered all the way through the story here. Is there anything about the Fund Midwest that I'm not asking that you think I should have asked or that you think is worth saying?
If you have an interesting company or are a founder that's interested in being an LP, shoot me an email, chris@thefund.vc. Follow me on Twitter @Chris Bergman. Follow Gylee Games. Actually, follow that one before me. That's more interesting and better content anyway. My stuff's all random. I ran about my kids playing Fortnite. Don't follow me on Twitter. And I think we're excited to unlock some capital in the Midwest and help founders succeed.
Eric, do you know what my favorite part about podcast advertisements is?
That people actually listen to them?
Wow, you read my mind. It's almost like we've done this twice now. Yes, that people actually listen to them. Look, you're listening right now, dear listener.
And me. I'm listening too. I'm listening to you, Jay, here on the Upside Podcast.
And if you have a message that you want to share with the Upside audience, people who care about startups, investing, the middle of the country, this is a really great place to put that message.
Because people will listen to it. And if you have an event or you just want to get something out about your brand, you're hiring, this is the perfect place for the upside.fm/classifieds. That's our classified ad that can run on 1 to 5 podcast episodes.
That's right. Typically, we lock in sponsors for longer sponsorships, but we wanted to make this accessible to you and your message. If you have a message to share with our audience, go to upside.fm/classifieds and get your ad on the airwaves.
All right, Jay, we just spoke. Actually, hold up. Look at that. You just spoke with Chris from the Fund Midwest. And man, I'm excited to listen back to this one. I haven't pre-listened yet, but I kind of want to interview you about the Fund Midwest and kind of get your feel on it. What'd you take away?
Well, here's the thing. You think I interviewed Chris Bergman of the Fund Midwest. I actually interviewed Chris Bergman of Gylee Games.
It's so hard having dual personalities.
I just had so many questions. There's a guy we talked about in the interview named Chris Volpe here in Columbus, and he talked to me about video game studio models. And I love it. It's such a fascinating business, but also such a terrifying, hard thing to run because, as Chris said, it's going to take 3 years to get this product to market. He has an employee roster of 40 people. That's a crazy model. And he raised funding from a group that had previously invested in ChoreMonster. Pretty crazy thing. And to think through levels of, okay, now we're designing these characters so that they can be cosplayable. And we want something that can be streamed on Twitch. Like he's doing business development in real time for 3 years before the release of this game that they put so much money and investment into. It's wild. And I couldn't help but say it, but dig into it.
Is that, besides the 3 years is obviously a longer time frame, but from the fun side of things, that's not that different, is it? I mean, to raise a fund, to launch a fund, you need to go out, you need to raise a bunch of money. It takes average 18 to 24 months to do that. And then as you're making investments, you need to think about how the market's going to receive the investments you're making to make follow-on investments in them. So I feel like there's some transferable skills there.
There's definitely some transferable skills there, but it really strikes me that, and actually Chris called this out, he said he didn't think that gaming studios like this are typically venture backable, and that this was a little bit of a different situation with his investors, because it's not like a problem solution type of situation. It's much more like entertainment, where you think you have something very, very interesting and unique and that people are really going to like, but it's not a painkiller necessarily. But he has some really interesting perspective on it. You know, he's developing a game for what he says is the largest segment of the gaming population that he feels is very, very underserved. He's thinking about the different levels of, okay, how does this live as a comic? How does this live as cosplay? How does it live on Twitch? How do we get this into the right discovery sections of the different gaming consoles so when it launches, it has a really good chance? But he also brought up a lot of the long tail opportunity of games that aren't necessarily present in other markets. So it was something really, really fun to dig into and talk about. That was not the fun Midwest.
Let's take this a different direction than we normally would for an outro, because I don't have anything, not even anything insightful. I don't have anything to add here to the end. So how does this, for the listeners who are familiar with what we're building at the Upside Network, what did you learn in this interview that can apply to the world of like an audio podcast studio?
Good question. The thing about audio is we can just develop so much faster. You know, a lot of what he talked about, the reason they have so many people on staff, and also, you weren't present for this, almost all of their people that they hired are from Cincinnati, because there's apparently a lot of VR and like people developing in Unreal and Unity in Cincinnati for big companies like Kroger, but it's way more fun to work for a video game company than Kroger. The thing is, they have to develop so much underlying technology to put the front end graphic technology on it. Like they're breaking the engine, so to speak, is what he said. And with audio, you can build and iterate so quickly and spin things up way quickly. He's not really looking to do multiple, I don't know, it's different than a typical network. And he's not looking at building a portfolio of games just yet. Like they're really focused on one game at a time, which is a huge investment in time and energy.
So that's the difference between the venture model, which is invest in X number of companies over 3 to 5 years and hope that one of them is a big hit, versus invest all your time and energy into one thing and hope that that's a big hit.
We did talk about the fun Midwest a little bit, so we can talk about that a bit.
I'm trying here, Jay. I'm trying.
I like this because this is a fund that is funded by startup founders and operators, and also managed by startup founders and operators. It's smarter capital in the way that the people that you're receiving money from have a lot of operating experience. They even have experience raising funding from other investors. And I think it's a really cool opportunity. You know, Chris was very casual and low key about it, like even raising the fund. And as one of 4 partners in the GP, he was responsible for raising a quarter of the fund. And he said it was pretty much just texting his different friends who are founders around the Midwest region saying, hey, do you want to be a part of this? And then they can surround their founders that they're investing in, 2 per month for the next 2 years, with these really great seasoned operators.
How do you or Chris think about the trade-off between offering that seasoned operator advice to other companies and founders and spending that same amount of time building your own company or his own company?
Yeah, I did ask him that. He didn't really think that there was much of a conflict because he was already doing a lot of this anyway. It's kind of the ethos of being a founder in the Midwest, where there aren't a ton of people like you, relatively speaking, you know, at least talking about like an overall human demographic where you're going around, a lot of your friends are working day jobs, or a lot of people around you just don't understand what it's like to start a company. And these founders are already talking to each other. So he's already doing a lot of that. He thinks a lot of this will be inbound as far as interest goes. But yeah, I asked him about that tension, because it does seem like you could be putting more time into your company, or you could be helping these different founders. And I think there is a degree of founders helping founders that happens all the time anyway. This is just a level of added help on top of it, which is capital.
I tend to agree with that. I know I asked for both your opinion and Chris's opinion, but I tend to agree that the benefits of consistently talking with and helping other founders will outweigh the hours spent on your own company in the mid to long term, especially.
And you and I are both bullish on models like Spearhead, where we think that founders typically have a really good ear to the ground and know who to back and who's got some traction anyway. I think we have that beyond some investors, if you're in the right circles, because it's a trusted network of people, and you're having really candid conversations with each other about what's going on in your business, and that gives you unique insight into what might be a good company and good timing to get in.
Well, Jay, Thank you so much for jumping in here as I worked through my calendar issues, which are now stronger thanks to our new sponsor, SavvyCal. You'll be hearing a lot more from them in the upcoming episodes. Dear listener, if you have any thoughts about this episode, if you wish Jay asked more questions about the Fun Midwest, you can reach out to us on Twitter at UpsideFM, or if you have something a little longer, a guest recommendation perhaps, you can reach out to us at hello@upside.fm, and we will talk to you next week.
That's all for this week. Thanks for listening. We'd love to hear what you think about this episode, so tweet at us at UpsideFM or email us hello@upside.fm and let us know. You can learn more about us and browse our entire back catalog of episodes at upside.fm. And if you love our show, please leave a review on Apple Podcasts. That goes a long way in helping us bring high-quality guests to the show.
Rocky and Sylvester. Super underrated, super underpaid. Today I'm gonna